how to write off your car as a business expense and pay less taxes. We're talking about writing off Range Rovers, Teslas, Porsches, Jeeps, Lambo trucks, or whichever type of car you wish to write off. Today you are going to learn the rules, requirements, and every step you need to take to successfully write off your vehicle as a business expense. And if you stay until the end of this video, you will even learn the exact documentation you need to keep up with to prove your tax deduction. Now, every year, the tax benefits have been changing as it relates to writing off your vehicle. For example, bonus depreciation on cars is set to decrease by 20% every tax year, and eventually it will not exist anymore, which will directly impact your tax savings. And if you don't know what any of that means, don't worry, I am going to break this all the way down here in just a second. If you're new here, my name is Sherman the CPA, and I tax plan every day for high income business owners over at mycpacoach.com. Last year, I literally had clients calling me from the dealership just to make sure that they could write off their new car as a business expense. And now you are going to get insight into that process, so let's get right into it. All right, so the first question I typically get when it comes to cars is, well, can I write off my car as a business? My answer to this is simple. Yes, you can if you use your car for your business. It's that simple. The tax law is very clear. If you use your car for business purposes, you can deduct it. So if you use the car 100% of the time for your business, you can deduct 100% of the cost. If you use your car 50% of the time for your business, then you can deduct 50% of the cost, and so on. So if you want to write off a new car, all you have to do is use that car for your business. But how exactly do you do that? How do you use your car for business purposes? What constitutes a business purpose? If there is no business purpose for your car, you cannot deduct it as a business expense. Therefore, the use of your car should help you conduct your business. Or in other words, your car must help your business earn income. That's the premise of any tax write-off, really. The expense must be ordinary and necessary to carry on your business or trade. So what does that look like exactly? If you want to write off your car as a business expense, you must use it for business travel. Business travel is travel from one business location to another business location. So for example, if you travel from your business office to a restaurant to meet with a business contact, that would constitute as traveling from one business location, your office, to another business location, the restaurant. In this scenario, the business expense associated with your car and the miles driven would qualify for the vehicle tax deduction. Now, other examples of business travel may include travel to meet with potential customers or clients, travel to deliver products or services, or even travel to film media content for your business. But the bottom line here is that you must use your car for business travel and for a business purpose. If you just do those two things, you should be able to write off your car as a business expense. But how you choose to write off your car is even more important. There are multiple ways to write off your vehicle, and one of those ways will save you the most amount of money in taxes. The method you select is so important that it may even determine the type of car you choose to purchase for your business. So let's talk about this in very simple terms. So on the highest level, there are two ways to write off your car under your business: the standard mileage method or the actual expense method. In other words, your deduction will be based on the business miles you drove for your business or the actual business expenses you incurred to operate that vehicle. Now let's start with the easiest method: business miles. The mileage method gives you a specific deduction per business mile that you drive. In 2023, the rate is about 65 cents per mile. So if you drove 10,000 business miles, you would have a 6,500 vehicle tax deduction. And that's it. It's very simple and straightforward. But this simple and straightforward method may not be the one to save you the most money in taxes. So let's turn our attention to the actual expense method. The actual expense method allows you to deduct your actual car expenses like gas, oil, repairs, insurance, license fees, registration fees, and our favorite, depreciation. Now, we'll address depreciation in a second here, but in general, if you want to save the most amount of money in taxes, you will want to choose the method that saves you the most in taxes. If you save more money in taxes with the actual expense method, then you probably want to choose that method. Or if you save more money in taxes by deducting your business miles, you may choose the standard mileage method. For my clients, I always evaluate both options and ultimately choose the one that saves them the most money in taxes. With that said, we need to talk about depreciation. Now, we love depreciation because depreciation does not cost you any money out of your pocket, and you can take it as a tax deduction. And to make it even better, the recent changes in the tax law, specifically related to depreciation, have been so favorable that people are literally buying cars just to take the depreciation write-off alone. Now, I don't recommend that at all, but if you are considering buying a vehicle in the near future anyway, understanding the depreciation rules can save you a lot of money in taxes in that pursuit. So let's dig a little bit deeper into depreciation here. So first of all, what is depreciation exactly? Depreciation simply refers to the loss of value of an asset. And cars are depreciating assets. So the IRS allows you to take depreciation as a deduction for tax purposes. Now, there are a lot of ways that people like to play with depreciation. There's straight line depreciation, double declining depreciation, bonus depreciation, and so on. And crazy enough, all of these depreciation methods are available to you inside of the tax law. So the tax law allows you to deduct your actual car expenses and take a depreciation deduction on top of that. And if you're like most taxpayers, you want to choose the depreciation method that, again, saves you the most amount of money in taxes. So let's quickly go over the different types of depreciation methods. Now, the simplest depreciation method is straight line depreciation, which simply depreciates the cost of your car evenly over each year. So if you bought a $50,000 vehicle and it has a 5-year useful life, then you could hypothetically deduct $10,000 per tax year in depreciation. Then there's double declining balance depreciation, which allows you to take more depreciation in earlier years to get a greater tax deduction today. For example, if you use 200% declining balance depreciation on the same $50,000 vehicle, you will be able to deduct $20,000 in the first year instead of $10,000. Now, regardless of which method you choose, you need to be aware of the car deduction limits that the IRS sets. The IRS sets a maximum depreciation limit that limits the amount of depreciation anyone can take in a given year. So even if the method you choose provides a higher depreciation amount, it is still possible that you are unable to take the full amount if the amount exceeds the depreciation limits set by the IRS. That is the case unless you use bonus depreciation. Bonus depreciation allows you to boost your depreciation expense in year one if you buy a qualifying vehicle. So if you buy a vehicle that weighs over 6,000 pounds, bonus depreciation would have allowed you to deduct up to 100% of the cost in year one if you purchased it before 2023. But now, bonus depreciation is phasing out each year and eventually it will not exist. Here is the phase out schedule for bonus depreciation. It will be 80% in 2023, 60% in 2024, 40% in 2025, 20% in 2026, and eventually 0% in 2027. So bonus depreciation is decreasing every year, but the tax benefits can still put a lot of money in your pockets today, if you act quickly. But even if you make a decision to write off your vehicle, there is still one final step you need to take to successfully write off your car, and that is maintaining proper documentation. For transportation expenses, you are required to maintain documentation to prove your transportation expenses are legitimate. For example, for business vehicles, you should keep up with the cost of each car expense, the date each time the car was used for business purposes, the business locations traveled to and from, and most importantly, the business purpose of the travel. Now, you can keep track of this information with a log, an agenda, or even a bookkeeping software like QuickBooks, for example. There is not one correct way to keep track of this information, but you must keep track of this information. That way, you can reference this information in the event that the IRS ever questions it to prove that your car deduction is legitimate. If this information is helpful, let me know by clicking the like button below. And if you own a business and want a comprehensive plan that is guaranteed to reduce your taxes and help you with things like this, then consider applying to work with me directly at mycpacoach.com. Thank you for watching, and I look forward to seeing you in the next episode.